Hello and welcome to another update video about Ethereum. So in contrast to Bitcoin, Ethereum doesn't really have clear 5 waves to the upside. You could argue it had with this last spike here, but it could also easily be an overshooting B wave. So my view is that we are still in the 5th wave, a little bit to what we talked about in the Bitcoin video as well, that we had here a 1-2-1-2 setup. This was the 3, the 4, and the 5. That would only finish off this 5th wave, yeah? So let me just put it on the chart, the subwaves. So, and that's purely based on, the situation we haven't really reached. So 1, 2, 3. We haven't really reached the target here to the upside. Bitcoin has, by the way. Bitcoin could also be finished, but it all depends on how we now see the pullback. What kind of pullback do we see? Anybody who missed the last video, I did say in the previous video that I'm looking at this move up still as part of the green 3rd wave that we've been discussing since we actually started down here. Remember that down here we did expect a rally. Of course it became stronger than anticipated, but you take it as you go, define support areas and so on. A trend can extend, and it's always quite impressive how these trends can extend to some sometimes irrational degrees, right? I mean, here we had another support area, trend reversal area. Here I had another small one, yeah, and all of them would have worked out in terms of trend reversal. I'll just make it a bit smaller. And now we try to formulate the next one, okay? So here we could say we had a 1-2, maybe a truncated zigzag, then here another 1-2 setup, 3, 4, 5, as I said. This could have been the top of this 3rd wave, and we might now see this orange 4th wave. So against what level can we now focus on higher? So we could say that we are now allowed to drop to the 50% FIB level, which is at, let me just try to do that accurately and try to rather give it a little bit more space. 1595 would take us to, 1595. Is the FIB level. Now it's a bit ambiguous, so we could say maybe wave 3 was in here or here. Now I'd rather base it on this one, not because I believe it or whatever, but it gives you a little bit more space if you want to set the stop loss. So that would set the stop loss below 1592. So below, as long as we're holding 1592, we could now focus still on higher. It might be that we come down exactly to that level. So when you set your stop loss, if you set it, that's entirely up to you. You might want to consider that, set it even a little bit lower because we have this trend line here. So you may want to consider that. Got this trend line here and also a bit of a volume profile or area of trade. You can see how we rallied up. Then we had a bit of consolidation. So sometimes prices come back to these levels. That would be exactly at the 50% level. So I wouldn't set it exactly at 1592, just sort of as a warning and as a hint. And at the latest then, should we drop down to 1565, it definitely can't be a wave 4 anymore, because then you're cutting into the wave 1. However, going that low would anyway already pretty much invalidate a 4th wave. So the idea is either we hold 1592 and then we can get a 5th wave to the upside still. So we have a bit of an additional support area here, trend reversal area for that 4th wave in orange. If we drop below that level, then I would even assume that, possibly the 3rd wave here in green is then already in, and we're coming down finally in the 4th wave in green. Something we assumed initially here, but because the wave 4 was so shallow, I rather count the move up as a extension of the 3rd wave and see this only as a sub wave 4. As I explained yesterday already, or actually earlier today, such a 4th wave, if it's a sub wave, they can be fairly shallow, but the main wave 4 is normally stronger. So again, it's all about likelihoods, it's all about probabilities. And if let's say we're breaking below this orange support area, then the next support area that would get active is then the green one. And if I say, right, maybe the 3rd wave was already in, which I currently don't assume, then we have a chance to come down all the way to 1430. So that would be a new area in case we come down now and break that orange support area, then this would become the next support area valid for the green wave 4, and we could then still expect a fifth wave to the upside here if we hold the green support area, which is between 1430 and 1562, between the 50% Fibonacci retracement and the 23.6. Bear in mind, here we only touched the 23.6, so don't try to wait for the absolute lowest price if you want to trade this. What I would normally do, setting several buy limit orders in this box and then scale in, yeah, not just set it at the bottom. You can do that, but you might miss on quite a few trades. Okay, and lastly, we want to look at the target. Target obviously here wouldn't change a lot, but we can try to specify the target for the fifth wave in orange a little bit, in that we could take the length of the orange third wave, and let's say we assume we go to somewhere in the middle here to 1615. And then again, target would be between 1716 and 1779, sort of a more specified target. That's pretty much the 61.8% extension, pretty much overlaps with the other one. So how we calculated targets here, there's a confluence around 1716, 1720. So that's probably a good one to focus on initially and then take it from there. Okay, and that's my update about Ethereum. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye-bye.